Welcome along. Today we're doing our deep dive into the financial world, looking closely at the FinWell Daily Brief. This is the 53rd edition, covering the market close on June 4th, 2025.
That's right.
Our aim, as always, is to unpack the snapshot, pull out what you really need to know, and just make sense of the key movements and news. And honestly, there's one fact right at the top of this brief that just leaps off the page. Indian mutual fund SIPs, the systematic investment plans.
Yeah.
They had a record 20,500 crore in May alone.
Wow, it's huge.
It is. And get this, 78% of that came from retail investors. That's a 40% jump compared to last year. The brief connects it to better financial literacy and just everyone getting online, digital adoption.
Yeah, that 20,500 crore figure, it's more than just a record. It really signals something deeper, doesn't it?
Like what?
It shows this financialization trend really taking hold in India. Ordinary households putting money into things like mutual funds, structured investments, rather than just, say, gold or property. And that creates this stable domestic demand for stocks. It's a fundamental shift, really, from how things used to be. Makes the market potentially more resilient.
That makes sense. A powerful force, individual investors acting together like that.
Exactly.
Okay, so let's get into the market specifics for today, June 4th, 2025. This data is from the brief timestamped 15.30 IST, the Nifty 50, closed at 24,620.25. That's up 77.75 points, so 0.32%.
So a positive close.
Yeah.
Suggests a bit of a rebound, maybe some, let's say, cautious optimism returning after things have been a bit choppy. Not a massive jump, but definitely firm.
But what caught my eye was the mid and small caps. They seem to do better. Nifty Midcap 150 up 176 points, closed at 21,340.75. That's 0.83%.
Right.
And the Nifty Small Cap 250 up 87.05 points, closing at 17,058.3, which is 0.51% up. The overall market, the Nifty Total Market Index, also gained, closing at 12,837.45, up 0.41%.
Yeah, that leadership from the mid and small caps is interesting. The brief sort of implies this shows the positive feeling isn't just limited to the very biggest companies. Okay. Sometimes you see this when there's specific good news for smaller companies, or maybe investors are just looking for, better value or growth potential outside the large caps. Suggests broader participation today.
Got it. Let's switch over to bonds. The brief mentions some movement there, too. The 10-year Indian government bond yield, it eased a bit.
Yeah, it dipped slightly, down to 6.21% from 6.27%.
Why is that happening?
Well, it's pretty directly linked to what everyone's expecting from the Reserve Bank of India. Their policy meeting is coming up June 6th.
Right.
And the brief is clear. The market is widely anticipating a 25 basis point rate cut. 0.25%.
And what's fueling that expectation?
The economic data mentioned in the source, basically. You've got CPI inflation consumer prices at 3.8%. That's, quite comfortable for the RBI.
Within their target range.
Exactly. And Q4 GDP growth was strong, 7.4%. So the thinking is, according to the brief, that this gives the RBI room to maybe lean towards supporting growth a bit more, an accommodative stance.
Which usually means lower interest rates, hence lower bond yields.
Precisely. The bond market's trying to get ahead of the curve.
Okay. And the rupee. How did it fare against the dollar today?
The brief had it weakening a touch, closing at 85.98 per US dollar.
Pressures there.
The usual suspects, really. The dollar's been generally strong globally. Plus, bit of caution here locally before that RBI decision, people holding back maybe.
Makes sense.
But interestingly, the brief also notes the RBI was seen intervening in the market, stepping in. And that action probably stopped the rupee from falling further, so they're actively managing it.
Okay, so putting it all together, we see domestic resilience, especially in those smaller stocks. Bond yields are hinting at a rate cut based on good inflation and growth numbers, and the rupee's holding relatively firm thanks to the RBI, despite a strong dollar.
That's a pretty good summary of the polls, yeah.
Right. So now let's dig into some of the specific stories highlighted in the FinWell Daily Brief. This is where we see how these broader trends impact individual companies. And kicking off the headlines, well, it's a pretty significant one. A report about the U.S. Department of Justice looking into the Adani Group.
Yes, the brief picked up on that story, originally from the Wall Street Journal. It's about a DOJ investigation.
And what's the focus? What are they reportedly looking at?
According to the source material, it centers on alleged sanctions violations. Specifically, things potentially happening via Mundra Port, and also allegations about manipulated AIS
Using a
signal.
ship tracking system.
Exactly. Manipulated signals on LPG tankers that are supposedly linked to Adani.
Now, it's really important we stress, as the source does, these are reports about an alleged probe, nothing proven.
Absolutely crucial distinction. But markets react to the news, to the uncertainty. And the brief notes Adani Enterprises shares fell 5% today after this report came out.
So the market reacting to the potential risk, not necessarily the substance yet.
Precisely. It's just reporting the information from the source and the market's immediate reaction.
Okay. Shifting gears now, some more positive news highlighted in the brief concerning Larsen & Toubro, L&T.
Ah, yes. L&T. Their water and effluent treatment division bagged some big orders.
How big?
2,500 crore in total from Rajasthan. It's for building pipeline networks and installing SCADA systems. Those are the remote monitoring and control systems for infrastructure.
That's a solid win, and the brief mentioned their total order book is just massive. 5.79 lakh crore.
Staggering, isn't it? For a company like L&T, that order book is everything. It means they have work lined up, revenue visibility for years potentially. It underpins their whole business.
You'd think that news would boost the stock, but the brief pointed out a little twist.
Right. Despite the good news, L&T shares actually dipped slightly today, down about 1.5%. The source puts it down to profit booking.
So people cashing in after recent gains, maybe?
Could be. It just shows, strong fundamentals don't always mean the stock goes up that specific day. Short-term market movements can be driven by other things. Right, okay. Let's talk about a stock that has been going up. Solar Industries. Hit an all-time high, the brief said.
Yeah, it's been on quite a tear. The brief notes, a 25% surge in just the last 2 weeks, trading today at 16,814.30.
Incredible. And what's driving this, according to the brief?
Two main things highlighted. A significant euro 402 crore order from Coal India, and perhaps even bigger, a huge defense MOU memorandum of understanding with the Maharashtra government worth 12,700 crore.
Wow.
Yeah. And defense, as the brief mentions later in its outlook, is seen as a major structural growth area in India right now. So an MOU like that signals massive future potential for a company like Solar Industries in that space.
And this run has pushed their market cap over 1.5 trillion.
That's right. It reflects the market's growing confidence, fueled by these big contracts, which, align perfectly with those key themes the brief identifies: infrastructure, defense. Okay, so we've covered the market pulse and some key company stories. Now let's zoom in on specific points from the Finwell Daily Brief that are really crucial for you, the investor. Looking at opportunities, but also, importantly, risks.
Good plan.
First up is the IPO spotlight. It's on Ganga Bath Fittings Ltd, an SME IPO. The brief lays out the facts. SME issue, price band 46 to 49, aiming for about 32.65 crore, and it closes June 6.
Right. And the brief was pretty direct in flagging several concerns here. Red flags, they called them.
Okay, let's hear them. These warnings are vital.
Absolutely. First flag. It's a commoditized business. Basically, their products aren't very unique. That means low margins, lots of competition, especially from bigger, well-known brands.
Tough market to be in, low margin.
Yeah. Second flag, weak financials. The brief contrasts their profit after tax margin for FY24, just 4.2%, with what they cite as an industry average of around 12%.
That's quite a gap,
Yeah.
less than half the average profitability.
It is a significant difference. Then third, there's this issue of debt dependency.
How so?
Well, the source points out that 55%, more than half, of the money raised from the IPO is going straight to repaying existing debt. The brief interprets that as a potential sign of, let's say, liquidity stress. Rather than funding exciting new growth plans, you're using investor money to fix past problems.
Not exactly what you want to see in an IPO, is it? You want them funding the future.
Ideally, yes.
Yep.
And finally, because it's an SME IPO, there's the general SME liquidity risk. It can just be harder to buy or sell shares easily on those smaller exchanges after listing, leading to more price volatility. Less institutional interest, usually.
Okay, so putting all those flags together, commoditized business, weak margins, using funds for debt, SME liquidity. What's the bottom line from the Finwell Daily Brief on this IPO?
They don't pull any punches. It's labeled a high-risk, low-reward bet. And the explicit advice for retail investors is to avoid subscribing.
Wow, okay. A very clear warning based on their analysis. Really highlights the need for due diligence, especially with SMEs. Now, another critical warning from the brief, moving into the digital asset space. Cryptocurrency rug pulls.
Yes, the brief explains this scam quite clearly.
Mm-hmm.
Developers launch a new coin or NFT project, make huge promises about returns or utility.
Get everyone excited.
Exactly. People invest their money, and then poof, The developers disappear, taking all the funds with them. They literally pull the rug out.
Nasty. What are the warning signs the brief tells you to look out for?
Key red flags mentioned include projects with anonymous teams you have no idea who's actually behind it, big promises of unrealistic returns like 10x your money in 10 days, that kind of thing.
Classic red flag, really. Too good to be true.
Almost always is. And also projects operating on unregistered or unregulated platforms. The brief gives very practical advice here.
Which is?
Verify projects if you can. They specifically mention using SEBI's Scores portal. That's the official channel for investor complaints in the regulated market. And crucially, they advise just steering clear of unregulated crypto assets altogether. Stick to regulated channels where you have some protection.
That's vital advice. Stay informed, stay cautious, especially in those spaces. We've covered a lot there. Market moves, company news, IPO warnings, crypto scams. It just shows how much valuable information is packed into one of these FinWell daily briefs.
It really does. And honestly, trying to track all this yourself every day, it's almost impossible. That's where having a source like SOS FinWell, who puts together this brief, is just invaluable.
Absolutely. They do the hard work of sifting through everything, news, data, reports, and they distill it down. They highlight what matters, the key numbers, the big stories, and crucially, those warnings like the IPO and crypto ones we just talked about.
Exactly. It cuts through the noise. Whether you're actively trading, investing for the long haul, or just want to understand what's driving the markets, this kind of curated insight saves you so much time and helps you focus.
So if you find this kind of analysis useful, getting it directly from the source makes a lot of sense. We really recommend checking out SOS FinWell. They produce these daily briefs packed with these insights.
Definitely. You can subscribe to get the full FinWell daily brief delivered directly. And they're active on LinkedIn to connect with SOS FinWell there. They share great updates. It's just a smart way to stay informed.
Good advice. Okay, let's bring it all together now. Looking at the overall market outlook and the strategic perspective presented in the FinWell Daily Brief, what's the big picture takeaway?
Well, the brief sort of balances things. It acknowledges today's recovery shows some domestic resilience, which is good. But it immediately follows up with a dose of caution about global headwinds.
Like what specifically?
They explicitly mention potential fallout from U.S. probes, like the Adani one we discussed, and also what the U.S. Federal Reserve might do, the Fed's policy stance.
So internal strengths, but external risks to watch.
That's the gist. And they identify a few key themes for you to think about. First, rate-sensitive sectors.
Banks, autos, real estate.
Exactly. The source suggests these could rally if the RBI does cut rates on June 6th, as expected. Cheaper borrowing helps them.
But there's a catch.
Yes, a crucial one. The brief cautions against just piling into any company in those sectors. Specifically, it says to avoid firms that are already heavily leveraged, carrying a lot of debt. Even with lower rates, too much debt is still risky.
Good point. Look at the individual balance sheet, not just the sector. What else?
Defense and renewables get another strong mention. The brief points back to the examples of Solar Industries and L&T's orders as proof that these are areas with real structural growth opportunities backed by government focus.
Sectors with clear momentum and visible orders.
Yes. And the third theme is global risks again. The worry is that a more hawkish Fed than expected, or ongoing negative news from probes like the Adani one, could cause foreign portfolio investors, FPIs, to pull money out of Indian stocks.
Right. How are those FPI flows looking right now, according to the brief?
It's an interesting dynamic. FPIs were actually net sellers of Indian equities this week, sold about 2,100 crore worth.
Oh.
But at the same time, they were net buyers of Indian debt, putting in 8,200 crore.
So moving out of stocks into bonds.
That's the pattern this week, yeah. Maybe they're playing it safe, waiting for more clarity, perhaps from the U.S. jobs data coming out June 7th, before committing more to equities.
But what about the domestic side? You mentioned the SIPs earlier.
And that's the crucial counterpoint the brief makes. Those massive, consistent domestic SIP inflows, that 20,500 crore a month, are providing a really significant cushion. This strong buying from Indian investors is seen as a key source of market stability, even when FPIs get cautious.
That really does underline the shift, doesn't it? Retail investors as a stabilizing force. Okay, so wrapping up the strategic advice from the brief.
The core message seems to be, stay prudent, focus on quality. Specifically, the brief suggests looking at sectors with strong order books, infrastructure, defense were highlighted, prioritize quality large-cap stocks for potentially more stability, and very clearly steer clear of those speculative high-risk IPOs and unregulated crypto scams we talked about earlier.
Right, focus on fundamentals, visible growth, and avoid the hype and high risks.
That sums it up well.
Okay, that brings us to the end of our deep dive into the Finwell Daily Brief for June 4th, 2025. We've covered quite a bit from the market indices and the macro picture with bonds and the rupee, through specific company news affecting Adani, L&T, solar industries, down to those crucial warnings on the Ganga Bath IPO and crypto rug pulls, and finally, the overall strategic outlook.
It's a lot to track.
It is, but unpacking these updates, understanding the context behind the numbers, is just so important if you want to navigate the markets effectively.
Absolutely. It's not just about getting the information, it's about understanding it, being diligent, and having a clear view based on fundamentals, especially when there's uncertainty globally.
Well said. And to leave you with a final thought, let's use the quote that the Finwell Daily Brief itself ended with today. It's from the investing legend John Bogle.
The stock market is a giant distraction from the business of investing.